Hey guys, this is Joey here, founder and chief trainer at Trading Impossible. Right, so welcome to this video. And in this video, I just want to share with you more on this counter called Genting Singapore. So a client of mine has actually asked me just to do a quick analysis. So I thought I should just shoot you a video and cover some of the points, and what we have seen over the past 1 to 2 years, and then what we can expect from now, and based on the trend, the support and resistance level, and maybe some of the simple indicators, right? So if you want to know more, okay, you can come for Precision Trading Intensive program, where I will go in depth into each of the specific areas that we are covering in terms of trading psychology, in terms of some of the trend strategy, entry and exit patterns, some of the key indicators that we use to further confirm our price action views, right? So yes, let's just go ahead with this analysis on Genting Singapore, right? So you can see that right now we're looking at chart of Genting Singapore. So I'm sure that if you're looking at this stock right over now, you can see that it is in a downtrend, right? We can actually draw a channel resistance line. Okay, channel resistance line is actually a downward sloping line, okay, that kind of cap prices. So that's where prices are actually trading below. So you can usually draw a downward sloping channel resistance line to kind of see the downtrend. Okay, you can see that right over here. Okay, there is a mark that is actually capped over here. Okay, it kind of touches over here and then touches over here. So prices has been trading down, since December 2013. Okay, it's been quite a while already, right? So let me just zoom in on what has been happening and draw some support and resistance lines to get a full picture, right? So you can just draw some lines over here, okay, to see that to actually look at some of the, I just want to go through some of the trading costs that were issued. So in this case, I think there were more sell than buy costs. So I'll just go through what we actually saw in the thought process, right? So just go on to draw more support and resistance lines. Okay, so yep, I think there's another resistance right over here. Okay, and this level. Okay, and yeah, I think this is another level we can look at, and 87 level. Yep, that's another level we can look at. Okay, and finally we are seeing some support at about 70-cent level and 80 cents. Okay, good. So we can see that yes, it has been I think in 2014 it was consolidating sideways for quite a long period, from beginning of 2014 all the way to August. So it's about a 6 to 8 months period, just trading above this $1.30. I think I did send an email when it did break below. So I think I already got my alert set up. So I think it broke that 130 level, and it was pretty bearish by then, because when it happened, on that particular day, volume was pretty huge, and yeah, there was huge selling pressure. You could see huge sellers coming out. That was one of them. But the thing is, we're looking at a trend. You can see that from this day onwards, the trend started to turn down. You can see that the 200 days moving average, the dotted blue line, was flat, but then it started to really seriously turn down after this 8th of August 2014. That's when the downtrend started to accelerate, right? And the 20-day moving average pull further away from both the 100 and 200 days moving average. Okay, so if you had any position, you could enter a long position from like 130 to 131 to 132. Since it had been holding for 8 months, you wanted to probably ride the rebound back to 135 or 136. It could happen, but you need to be very careful, because if it break down, and it did break down, below that 130 level. So if you have any long positions here, okay, you need to place a stop loss below 130, probably at 128 or 1285, 1275. Okay, so if it breaks below 130, we get out. Okay, especially with all this confirmation, right? And of course, we can look at the MACD. You can just cover very briefly. You can see that on this day onwards, you can see the MACD just surge down, put down all the way below the zero mark, right? And it started to move all the way down. So MACD can actually signal that the negative momentum is coming and the selling pressure is coming, right? So yes, in terms of the price action, 130 would be the new resistance level, and it came all the way down. So if you have shorted, you could have profited all the way you can probably buy back some position near that 110 to 120. So I mean, we never know how low it can go at this point in time, but what we can do is we can let our profits ride. So all this way, all this while, okay, when we shorted at 130, you can see it came all the way down. There probably, I mean, you can probably put a trailing stop loss, able to rebound back slightly, right? So right at this level, right over here, I'm able to break above. You can see that all this while, as it moves down, it's forming lower lows, okay, lowest lows. So the high of each day actually come lower and lower. So up to this day, it consolidate and break above. So probably you can have a take profit over this level. So you short here and you buy back right over here, all right? And then you start to monitor and look at the next consolidation phase, right? So you can, from this period to this period, you can see that yes, we managed to see another resistance forming at about the 115 level. All right, so it kind of consolidated sideways, not able to go above that 115 levels. Okay, and yep, support was at $1. Yes, this is a psychological support. So normally levels at $1, 150, these are where we are seeing quite a lot of support. So yes, it did rebound back up, rebound 1, 2, 3, 4, and then it break down. Right, so this $1 was the support level. If you wanted to actually scale in some long positions near $1, you could do it, but of course the trend is down. Okay, you can see that you're forming lower highs along the way. So at this point in time, you can see that the trend was down. Of course, at this point in time, you couldn't see any of this thing on the right, but just right over here, we could see that the trend is down. Okay, you can see the trend is down. So I actually scrolled to the left, right? So it broke that $1 level, right? And of course, at this point in time, all the moving average started to accelerate downwards, and 20-day moving average is below the 100, which is also below the 200 days moving average. So this could be I think there was a CFD sell call that was issued when that $1 level, the psychological level, did not hold, and when there was a clear breakdown, right, and closed below. Okay, so let's just go back again, right? So yeah, it actually went below that $1, find a support, okay, rebounded back up. Okay, yeah, it did cross back above that $1 level, which is a good sign. But however, $1 was the support, it became resistant and it became support again, so it broke down again, right? So that's where we could see that the trend started to head down, and the trend started to strengthen again to the downside, right? And the 200 days moving average is still consistently pointing down, right? So this $1 support level broke down again, and it came all the way down, right? So currently what we are seeing is we're seeing some resistance at the 0.86 to 0.888 level, okay, which also coincides with the 200 days moving average. So support would be at about the 70 cents level, right? So we are very, very close to this level right over here. Okay, it actually touched this in September 2015 last year, okay, and rebounded back all the way to above 80 cents. Okay, and did manage to cross above that 87 level. I mean, this was the support that it broke down from right over here. So now it became the resistance level, okay, and it came all the way back down again, and now currently we are even looking at a lower range at just below 80 cents. So currently we are seeing a resistance at 80 cents. So the range is probably 70 cents to 80 cents now, not even like 86 or 87. So what we can see is that the trend is still down for now. We can see that moving average is still pointing down. Okay, MACD is still has actually gone has tried to go above that zero mark, but it started to reverse back down again on this price action, and it's still down. So it's pretty negative for now. Right, 70 cents is the current support, right? So if it were to break below this 70 cents level, okay, we might need to be careful. There can be more downside. We can have more CFD sell positions to ride the downside lower to probably 60 cents to 55 level, right? We can probably scale out again to see what are the support. You can see yes, right over here there's probably some support at around the 64 level, and then 60 cents, okay, and then all the way to 50 cents right over here. So this was the resistance level, so 50 cents, right? But one thing to take note is that the low it has gone to in 2008 was 30 over cents before it gone all the way up to 220 and then started its decline. So when we are trading, we need to know that when the trend has turned, we really want to get out. We don't want to hold all of a stock. Hold on to a stock that we have bought at $2.10 or $2 all the way down to 30 cents and we sell out, right? So we need to have a clear trading strategy or a clear cut loss plan, so that if the trade were to go against us, we just get out and we time our next entry on exit again, right? Or we take a long and short position. Okay, so currently 70 cents seems to be holding for now, but if you would like to have long positions, okay, you can do it. See, it kind of rebounded from this 70 cents level, right, all the way to above 80 to 86. So yeah, 70 cents to 80 cents is about 10 cents, or maybe if you go above 80 cents, it can go back up to 86, right? But the thing is, the trend is still down. So if you want to do it, it's perfectly alright, but we need to have a plan for this particular long position just right at this support in case the 70 cents were to break down. So yeah, if you want to buy at 705, 71, you can do it, okay, and you were to go above this 735 to 7410 resistance level, you can see right over here, yeah, it can start to push up back to 86, right? So then that's where we would like to take profit along the way. From above 76, 78, 79, we take profit along the way because the trend is still down, right? So that's what we can do for a long position to ride a temporary technical rebound, right? So we have a stop loss, probably at 69 or 685. If we were to break below, yep. So and that will be a pretty good reward to risk ratio. So we can have a reward ratio of about 10 cents and stop loss probably 1 to 2 cents, right? Just below that 70 cent level, right? So as we know that the trend is still down, so we can also ride the downtrend back down again, okay? But if you want to short at this level at 705 or 71 or 72, I wouldn't advise it, because one thing is that this support is still holding for now, okay? So normally for a momentum breakout, a trader, which is what we do as well, maybe a trend, but we use momentum to ride the downside, okay? We do not want to short when it's just supported above that pretty good support level, right? Because it could rebound back up like what we have seen over here, right? So we only want to have our CFD sell position triggered or already able to break down, right? So other than that, if it does not break down, we can say that it is still good to hold and it might even rebound back up. So that's why you can have a long position, but take note that the trend is still down, and you can take profit along the way to, it might even touch 80 cents and come back down again, right? So yeah, we can also take a CFD sell position if we were to go near the 80 cents. So probably at 78, 79, 785, we can start to have CFD sell position, so that if it touches, we can ride back the downside with, of course, a buy stop loss at above 80 cents, probably from 805 to 815. Okay, that's how we ride the downside back down, because the trend is down. We want to have CFD sell positions, that is in line with the downtrend, okay, to profit from the downside. So that's how we actually participate in the downside and profit from it, using CFD. Okay, so yes, I think that's it for this video. I think we have covered in terms of the trend, in terms of support and resistance level. So yeah, if you're keen to learn more, you can come for the Precision Trading Intensive program, where I will cover in a very structured process how we analyze a stock, in terms of the ultimate blueprint to stock trading, how very, very detailed explanation and case studies, and of course a hands-on approach to really analyzing a stock, right? So we'll cover in detail some of the key strategies, some of the key patterns that we look out for, right? So right now it's pretty basic, but this is the core fundamentals, which is also very important. So it's good that you learn about it as well. But if you want to know more, it's good that you can come for this intensive program that will really clarify all your doubts, right? So I hope you have learned something from this video, and I'll see you soon in the next video. Thank you.